what's up, everybody? All right, getting started here. Here. Where's the music? Oh, there we go. What's up, everybody? All right. I'm just now catching up. Going on here. Let's take a look. It's non-farms today. Oh, that's right. It is Friday. Okay, working on that. And look at some of these things. These are all old. Those old numbers here. All right, taking a look at today's setup. Bear short of hedge pressure. Oh, okay, so this is resistance right out the door. So I don't short bull markets. So a hedge pressure break. It's got a little bit of upside if it does break 515. There's a little bit of room up there. Big extended decay pattern, I'd say. Kind of stuck between the two. Today is actually not too terrible. We should have a decay pattern. Pressure's both ways. What up, everybody? Good morning. Let's take a look at QQQ. Not entirely actionable today. I'm gonna wait for a decent setup. After a big fall yesterday. So what happened yesterday? I wasn't even around. I didn't even look. And so whenever I have this technique that whenever I'm not trading, I don't even look at the markets. I pay zero attention to it. Like, the whole idea is not to be enticed to jump in. I don't know how to get surgery, so I was with her all day. But I looked at the end of the day, and the market just completely collapsed. S&P fell like 100 points last couple hours. What's going on there? Ukraine being put into NATO, is that what it was? Oh, okay. Interesting. So like right there, a little bit of resistance off of hedge pressure. Any break on this side, again, there's no clean bull market. There's a liquidity pocket here. So any break to here, there's certainly trade setups there, and there's resistance there. That would take a break of 515, which would be the rare of the case today. So if we do start breaking 515, it just retraces a big part of the move that was lost. Here, same deal. We open in bear zone. We're likely to close in bear zone as long as these lights stay rational. So for the most part, it looks like there's limited trading today. I would say that we're probably going to chop around, maybe try to make some runs. And then if anything happens, it'd be probably closer to the end of the day or not. I don't feel like we're gonna get an opening breakout or move today in the actual live session. You did a video yesterday? Okay. Oh, the DD ratio just came in. Yep, 27. Wow. Okay. That's a big deal. Okay, this is huge. It's the first time we've seen this in a long time, actually. I think only about, at least this year, it's the first time it's been less than half in the entire year. What that means is the majority of the market cap of all the stocks in the S&P are in bear zone. So 50 is the cutoff. So anything above 50, stocks as a whole are in a bull zone. So today, stocks are in a bear zone. Let's get the monthly map out. Let's take a look at this. That's one of the cornerstones of reversals in markets. So that actually shows today that the market is positioned as of yesterday's close to be actually bearish. General. So something yesterday really shook the market up. This is not a dip to buy. Sure. For me. Yeah, and look at this. Look at the bull liquidation. This is massive. Okay. So the monthly maps also imply, you know, the bull side is sloping up like this. The bear side also sloping up. This is very bear market. So bears are shorting harder, bulls are liquidating positions. This is a week of selling. So this is a this is not done falling. Whatever we get, there's gonna be highs to short from. This market's coming down. All right. Well, you got to see. It's not a one-day event. This is there's going to be a continuation of this. Maybe if not today, but the next week. You guys see that? Wow, don't y'all love Rocket Scooter? We can see these things from a mile away. So here's your monthly map. We talked about it. My stream, I think on Tuesday this week, was talking about it. So this is we're finally starting to see some topping patterns, especially in the NASDAQ. And all signs are pointing to a week or two of liquidation. That's the one thing I did say before we started selling. First time I said that, and now DD is starting to fight. A lot of money shifted around. Yeah, I think whatever's happening, the scare is gonna be a little bigger than just a one-day thing. Even if today we recover, it is still looking to have selling. Look at Nasdaq. Nasdaq is extremely volatile over the next week. Spaces in between bull and bear zones imply high volatility. Bull zone is liquidating very rapidly on Nasdaq. Bear zone is mucky. It's like real choppy, so it's hard to tell. But whatever happens, I think we're going to be trading lower for a little bit, a week or so. Have I seen the previous reports? Oh yeah, commitment traders. Let's go. So this is a week behind data, by the way, so we won't be able to see what's going on this week until next week. Zooming in a little bit. I guess I'm gonna show that. I want to see. $9.52. So the long side, the positions, right? Since about January, have kind of peaked out. Like the long is not increasingly getting longer. So the amount of net long on the asset manager side, the total position is about the same. And the short side is starting to pick up very heavily. So the shorting has been taking place since about November as well. When these two, the blue and these green lines, leverage funds and asset managers fan apart like that, it means that the market's just very liquid. There are people shorting this market, there are people longing this market. So buyers, sellers are very close to each other. And so when buyers and sellers find each other, markets are liquid. Liquid markets aren't volatile. Therefore, we haven't had any volatility. When this green and blue fan out, there's no volatility. So now I'm very sure that this red candle is going to be reflecting next week. They'll have a little dip in the green line on the next report. Dealers are also negative against the sheer amount of buying. There's just not enough shorting to cover or to take the other side of the trade to the longs. So dealers on the other side. So this is a very common bull market pattern. This right here over the long haul. This you have a little evidence of like a similar setup here where the green is going up and the blue and red are going down. That's like this leg right here. It's just a nice strong bull run. It's normal. It's pretty normal in a bull market. So partly of what's fueling this market as well is short squeezing. You're getting like bumps of shorts covering along the way. But in general, people are just pushing and shorting this market harder and harder and harder. So once the bulls start selling, if you see that green line dip, then it's going to flip likely to a bear market for a little bit. We have DD scare today at 0.41. That's a bearish market structure. So keep that in mind. The S&P is opening in a bear zone. DD ratio is less than half. Means the stocks are there too. So not a good sign. So the chances of breaking out and rallying is really, really low. So this moving here, like NASDAQ going up to here, I'd be willing to short up in here to bring it back down. Same thing here. This breaking up into there, I'd be willing to short to bring it back down. So in the particular setup, we're looking for volatility to get the market to move really quick on some kind of news event, and then it's probably gonna come back down. So this transitional day is not easy to trade. VIX clearly is kind of like, I thought it said a decay pattern, but actually it's more of like a stable pattern. There's no pivots in the VIX for us to imply that anything's gonna happen yet. So no long side setup today. Easy to see that. Do you mind going over the COTA? Oh wait, Mideast intentions. Hey Matt, why don't you post risk intervals, numbers, or indices in other markets on Discord anymore? Oh, because they're in the platform. They're right here. So it's all automated. We automated everything now, so we got rid of that risk interval bot that we used to do. So if you go to your platform, you go right here. I'm circling, and then they'll all be down here. Easy as that. Give me a second, I'll be right back. I don't really see any setups unless there's a strong push to 515 on SPY, possible long setup there, just to scalp for like 20 points. That's it. I don't think it's gonna happen. VXX. VXX is still in like a, it's like in a bullish setup today. Oh, wait, hold on. here. With volatility increasing, I know that the market can get much more turbulent. So I'm not, with the idea that volatility is present, I don't chase green candles on bull setups. I usually want to wait for dips to buy. The problem is when I look at this, I don't see any good dips to buy. Well, clearly, if there's a continuation today and the market collapses and hits monthly, always a long off of monthly hedge pressure somewhere. The volatility increasing, I don't trust any movements to the upside. This like this, you know, I expect the market to get wider, however it works. So in days like this, I don't see things to pivot off of. If one were bearish, this is the place to try to be bearish from. But I don't think there's enough velocity for a continuation move off of yesterday. Our catalyst today, it's the end of the week. But I do... What do you guys think? Are y'all doing anything? Any trades today? Yeah, yesterday we closed below on an event, right? So the stats are in the conditions of the rational rules. So if an event causes it to happen, then it's not the event. You already know that we don't use liquidity maps during events. Oh, you took a short? Nice, Edward. Nice. Okay, good luck. Why are VXX and UVXY hedge pressure and opposition the same next to each other? Because they're two totally different traded instruments with different landscapes. They're not going to match really at all because they don't track each other. They're not tied together. They both track the VIX in some way, but these are related to their own specific options setups. So while one may be up, one may be down, that's just the nature of those individual instruments. So like SPY and SPXL probably look slightly different. They both track the S&P. They both have their own individual landscapes. You can use both of them together for clues. That's what a lot of people do. So in instance, you can use different VIX to kind of like look for like a super influence to see what is this VIX instrument doing and that VIX instrument doing. They all have different layouts, right? So they all independently move even though they track their own individual thing. The reason for that, well, what if there's one firm that has like $1 billion worth of an investment using volatility instrument, right? What if they just pick UVXY and not VXX? Then there's a lot of the risk shifts in one and not the other. So the net sum of like everybody's behavior is gonna be spread out across all the instruments, but you're not gonna see the two of them. The options match each other. Somebody might have bought $10 million worth of puts in VXX at the end of the day yesterday, or calls or whatever, and then it just shifted the liquidity map in that one instrument. So that's a good question, though. Good question. Res is looking pretty okay. Are we already near upper DD band? Yeah, we are. All right. How can you quickly figure out where it's going? Yesterday's sell-off was... Okay, let me I don't remember what time. Let me go back and look. It was about 1 o'clock. About 1 Eastern. First of all, we have rules where in the last 2 hours of the day, we don't try to trade. It's random. It's 100% random, and you're gonna realize that if you do any back test. All of your indicators will show like complete randomness in those last couple hours. Because how markets tend to behave, running into expiration of options, which happen every day now in the index. So just the entire index runs randomly. You should think it should be more two-dimensional for things like yesterday's sell-off. For instance, you're a position short, but that sell-off was being distributed somewhere. To be strong sell pressure. How can we quickly figure out where it's going? Okay, so the selling pressure. Where that money is going. Well, the old index is selling off. That money's probably going to cash. Force. It's hard to say. Force selling, force shorting. If puts get triggered to go in the money, it's going to force people to short. It could be just people dumping longs. Is probably what you saw. How to see where the money's rotating in. A good way to look to see if it's changing one sector into the other. The net sum of the market cap is leaving the stock market, which is why the S&P is coming down. If you want to see is their money fluxing in somewhere else, maybe slower, but still moving in, you just look at the different sectors, seeing if the sectors are, you know, stronger versus we like if the S&P is selling off and everything's selling off and energy's rallying, you can see that there's money moving into the other one. But looking at the sectors is a good way to do it. Well, but one could say if the S&P is falling, you know, 2 or 3% in a couple hours, the money's probably leaving the entire stock market. It might be hard to find out where it's moving into. It's kind of chaotic at that point. A lot of times if the S&P or the Nasdaq are flat, right? And then you see that there's like one sector selling really hard, then it's easy to find what sector is pumping really hard. Because if the index is flat, then the same amount of market cap is just moving from one place to the other. And so if like you're like, man, energy's tanking today, but the S&P's flat, then you have to see like, well, that money is going somewhere, and it's easy to go find it and you look at the sectors. And is there a way to create an indicator for that, like a money flow kind of indicator? Yeah, absolutely. There's a bunch of ways you can look for activity like that. You can volume, you can look at options, you can look at individual stocks, you can look at sectors. Yeah. Yeah, you could. So not a clean trading setup today. Again, this is like last week or so. Hasn't really been too appetizing. No, I wasn't trading at all yesterday, so I missed out on all the fun. So overnight hedge pressure levels. Yeah, so the overnights are pivots that are based on the end of the day before we get the end of the day, the beginning of the future session, the end of the equity session. So for instance, last night, Thursday night, equities ended, futures started. So right in between the two in that hour, we do this calculation. Just hour and a half, I guess. So you have the overnight calculations are based on an open interest model that I made that tries to forecast what the open interest will be for the next day. And it estimates where hedge pressure is likely to be the next 9:30 in the morning. As long as price stays exactly the same overnight, which it never does. It's a baseline. We did that calculation to kind of estimate where hedge pressure is likely to be. But then of course, you know, 16 hours happen and then the market's dynamic is different and the actual numbers come out in the morning with the actual open interest, not the model. And the difference is that overnight model, yes, they'll be in different places, but that's expected. It's kind of like you treat the overnight like a separate entity and then the morning like a separate entity. They're both actionable. what we found out is that the overnight dynamic calculation is actionable throughout the rest of the day too. So what those numbers were, a good example, they're actually very actionable. Today it was, what is this? 51.94. So our draw line at 51.94. Literally here, like that's literally the S&Ps. Look at this. Oops. I do flip this to a long chart. Oops. Let's get off a long chart. So while we have hedge pressure here, which is the actual number, the overnight dynamic was literally 51.94. Look at where non-farms pivoted off of, right? So they're still actionable in the daytime, which is really neat to see. But that's why they're slightly different, yeah. Well, the overnight actually is really good. As we found out that it seems to have a lot of activity there, because I think a lot of large firms have come to the same conclusion I did is the best way to create a model like that. And so I think there's a lot of hedging that takes place in that same area. It's really neat. Yeah, so here's that 51. Let me show you on Thinkorswim where I actually drew it. So this is what our bot calculates at 5:45 Eastern, right? And you can see the pivoting action here. And then even this morning, it's like pivoting like right near that level. This is what our hedge pressure calculation estimate comes up with. It's pretty accurate, actually. So we found out that they're just actionable even throughout the day session. So you can even see right here, there's certainly pivoting on the NASDAQ off of its own estimates as well. So hedge pressure's estimate is supposed to be somewhere in between those blue lines. And so we found out that the boundaries of that range is actually, both of them are actionable. It's pretty neat. And our members are the ones that kind of noted that. They started noticing those patterns. Dude, it's so good. Yeah, the dynamic tool is great. I invented it to help me hedge positions overnight. So like at the end of the equities day, you know, like if I was long a bunch of stocks and at the end of the day, markets sold off really hard, I'm like, oh crap, did I dump my stocks or did I still hold on to them for the years, you know? And I go, well, let me short some futures. Well, where would I short futures just to hedge in case the market were continuing to fall? So it was like, okay, here's the two hedge pressure possibilities. And if you trade below both of them, the chances are it's going to continue to fall. Let me make sure I short futures from there and from there, just to say short, so my position that's long gets hedged to the downside, or to buy options. So if at the end of the day, I can have these numbers calculate, because they're dynamic, they calculate in real time. So at the end of the day, right before the options market closes, I can say, oh, well, let me buy some puts right underneath here, just in case. I'll buy them in SPY or something. Yeah. All right. So this is interesting to see. Not really that great of a setup. I didn't really feel like I'm going to take anything. After a day like yesterday, the market's got to figure out how to absorb that. Things still look very bearish, especially with the DD ratio being the way that it is. Yeah. Short seems good here, probably so. I'm reading what you guys are saying. Yep. Yeah, we go to the restroom real quick. Be right back, guys. One second.
Now you can play the podcast you love on YouTube in the background on the YouTube Music app.
All right, guys, I'm back. So sorry for the delay. Still watching things move. It's like watching paint dry here. Market's moving up to this kind of yellow line area. I'm looking for there to be resistance. We were talking about that earlier today. I don't see any need to take any actionable trade here. I don't see anything actionable to trade off of. So I'm just gonna see if anything cool comes out of this, but I don't really know. And every day is gonna be a trading day. Ooh, my hair looks good today. And just crawled out of bed though this morning. It's been a rough week. Oh yeah, let's do a quickie yellow line from the move yesterday. Give me 1 minute. Let's get all this set up. Smart thinking. I'll teach you guys how to do that technique really quick. I honestly, if you were to tell me what I think is going to happen, I think with today's activity and lack of continual downside move, I think that we do push higher today. I don't think that today closes as a red day or continuation from yesterday, even though there is some selling pressure. I think that it's going to try to force its way higher to try to retrace half of that move. We'll calculate that red line to see where that is. So I think by tomorrow we should be interacting with it. We shall see. Okay, give me 1 second. All right. Okay, so here's how you do it. Let's pop it up. To the S&P first. So we're going to go to a tick chart. Use a 25. I might have to zoom out a little bit because there's a lot of data, so I might not have that. See if we can catch it. Here, some only shows you so many total ticks on a tick chart for denomination of this. So this is probably at 130 at 5240. Oh no, I have to zoom out a little bit. Won't go any further back. We're gonna do our best effort here on a 33. So while it did seem to come from, you know, people are saying news, but there's no clear event that caused this move to sell off. It's just the news kind of probably accelerated this, but you can easily see like where your eyes focus immediately to right there. This is it. So the first thing you do, you find the highest probable cause for the event and you do this. There's your here to there. And then you go for the volatility gets bigger and smaller, just like that. Look for this exact move. There it is. You didn't see what I was doing. You're looking for the market to move down and exhibit some volatility, which means the V bigger, and then the V gets smaller. So you're looking for volatility expansion to hint at the exhaustion point and then the contraction. So the volatility expansion, you see there's a V right here, a big V right here, and a little V right there. That's what you're looking for. Okay, and then there's your impact. The heck? Oh no, on my screen here. Okay, let's go ahead and zoom out. Let's pop out to a minute chart here. How am I feeling? Much better, actually. I am feeling much better. It's been weird because like I was having this has been a hard week for the whole family, actually. My mom had to get eye surgery, so I was with my mom all day yesterday. She's doing good, so thank everybody for your well wishes. It's really kind of all of y'all. Yeah, I was hospitalized for high blood pressure. No good. So they got me on some new meds. It's genetic, so it's like, you know, there's nothing I'm doing. I eat well, I exercise, I'm healthy. I don't eat a lot of salt. I don't do energy drinks anymore. Like I'm pretty much like living my best life. There's like really not a lot of stress in my life. Well, I don't know. Maybe building a trading platform could be secretly stressful. Y'all make my job fun. Yeah. I had a BP spike of 190 at the systolic. So he had me on observation. So I got on some meds now. So I'm like, okay. My brother has it, my mom has, we all have it. So I do drink. That is the one thing that I have not done all week. So I am definitely known to drink like a cocktail or 3 on the daily basis, like with dinner or like in the middle of the day, just sipping. Like I definitely do drink. I don't drink a lot, but I definitely drink 2 or 3 cocktails a day. Maybe some people consider it a lot, but I don't get like drunk. I like to drink with dinner, nightcap at the end of the day, you know, nightcap after my stream sometimes. So I haven't been doing any alcohol either. So when had food yesterday and I ordered water, and my girlfriend was like, wait, what? I was like, yeah, I'll have water, please. Insurance expenses today. Oh yeah. That IV pumping into puts and calls. Yeah, this is a terrible time to buy puts and calls now, as the IV is baked in those premiums pretty high. So how's the Robins going? It's still going pretty well. I don't know what place I'm in because somebody bumped me out of 5th place, and I'm still working my way back up. Thank you, Art. Appreciate you guys. Thank you, Matt, for everything. Have a good weekend with a lot of comfort. Oh, Maria, love you so much. Thank you. Fasting with alcohol, your blood pressure went good after you stopped alcohol. That's exactly what my doctor was going over the checklist. He's like, so do you do this? Do you smoke? I'm like, no. Do you do this? Do that? I'm like, no. Do you work out? No. He's like trying to figure out what he's like. Do you drink? I was like, yeah, I kind of drink. Like, all right, so there's our red line today, 5246. So we'll know that this is the achievement of this is going to at least want to pull out and at least connect with there. I think today it's going to fight its way higher by the end of the day. It's not going to go straight there, I don't feel. Like I would say that it might do this. Like this. Days like this tend to like kind of like, y'all nowadays get like that. It's trying to still sell, but there's going to be some upward momentum, slightly, if it's trying to retrace. Okay. All right. Like Nasdaq can come out with like a nasty red candle and then a green candle. We'll see. Let's do it for Nasdaq as well. For Samir, what's up, Phoenix? Welcome to the stream. Okay. What we're doing is we're doing impact and run length illiquidity pivots. This is a technique we teach. Hang tight. Show you what we're trying to do. We're trying to find retracement targets on the index. Are there any gamers in here that have been playing the Final Fantasy Rebirth? Final Fantasy 7 Rebirth? So remember when we were all like kids in the 90s, or most of us are probably kids in the 90s, and Final Fantasy 7 came out, and that was like the cultural phenomenon that it was. And they remade it like 4 years ago, I think, and they made it into like a three-part game. Well, part 2 just came out a month ago, give or take. It is literally, I'm going to tell you, just like The Godfather, episode 2, and just like Empire Strikes Back, episode 2 is by far one of the best RPG games of that genre I think I've ever played in my entire life. Like, it is so good for like just being a game in general. It's so fun. I get a chance, a minute or two, I'll dive into it. It's real nostalgic because it's like the old game, but remade. It's really pretty graphics and it's really nice. But I've been slamming some FF7, baby. And the second installment by far has been I think there's something all glitchy right now. It's been awesome. Let me close down some of these programs. I can open over here. So let's draw these red lines. So with these different lines that I'm drawing right here are going to be that return targets if the market does turn around and reverse. I feel like there's like a double. You guys can't see it. Hold on. You need the PC port? Yeah, like I bought the first of the 3 installments on Steam. I bought it a year after it came out. You know, they usually have this exclusive thing with Sony and Square Enix. So usually there's a 1-year exclusivity on the PlayStation before it goes out on Steam, which really sucks. All right, there's the lines. I'll give you the numbers really quick. S&P. All right, so no trade setup today, but we are looking for this retracement target for the engines way over there. 52.46.40. Draw some lines here. Or 50, sorry. Round down to nearest tick. Get red, just get red. Clone. 52.97.25. Okay. Yep. All right, so today's setup, really nothing going on here. Looking for pressure here. We're looking for the market to close inside of here. Opening in bear zone. We're going to likely close in the bear zone with the CD ratio being half. So if this market does try to fly its way higher, by the end of the day, I do expect it to settle out somewhere in here. Oops, sorry. Just our rules put together. DD ratio on the infographic. What is that? Close that down. Shows that if you open in this bear zone, you're likely to close in the bear zone if that ratio is less than half. So this market, whatever it tries to do, is going to likely want to stay down here. This is hard resistance at 519. Bear zone right there. That's very close to this red line. There it is. So looking for that. I'm not looking for the market to continue selling off today, but I'm looking for the market to really figure out what it's doing. Because this is the first time this year the ratio has been less than half, which means the majority of market cap is in a bear zone of all the stocks in the S&P. So the stocks themselves are starting to exist in more bearish territory today. Well, I love you guys. That concludes our stream today. I'm not gonna do any trades. I don't think the market's gonna do anything today. I want to get a nice good setup and really hit it hard. Tomorrow or Monday, sorry, Monday will probably see something good. So thanks for tuning in every day. We'll see y'all Monday. Have a good one. Love you guys.